If you're thinking about trading MicroStrategy stock, I encourage you to watch this video before you make any moves, because there are some hidden risks associated with it that could absolutely decimate your returns. Now, if you don't know who I am, my name is Oliver El-Gorr. I am the founder and CEO of Freeman Publications. Throughout the last 5 years, I've helped tens of thousands of investors and traders avoid costly mistakes like this one and make a lot higher returns while doing so. So stick around for this video where I'm going to outline MicroStrategy, their business model, their latest move, and why I don't think the stock is a great trading vehicle. So what everyone should know before trading MicroStrategy stock, and I've got Michael Saylor here, and he's going to be a very important part of this story. So first things first, bit of context. My primary trading vehicle is the wheel strategy, which is where you sell put options on stocks that you don't believe are going to go down in the next 30 to 45 days. And then on the off chance they do go down, which happens between 10 and 15% of the time, you sell covered calls on those stocks if you do get assigned. Now, MicroStrategy itself is up 2,300% in the past 5 years. So in theory, this would be a great stock for this particular strategy. But what I'm going to talk about in this video also does pertain to other strategies as well. So to really understand this, we have to go back to pre-2019 and what MicroStrategy's business was before this Bitcoin pivot. So it was a business intelligence software company with fairly stable revenues, wasn't really growing. It was slightly profitable. We're talking 500 million a year at single digit net margins. That's what it did in 2017, 2018, and 2019. Then in mid-2020, Michael Saylor makes the decision that is going to define his whole legacy, which is converting a large chunk of MicroStrategy's cash reserves into Bitcoin. Now, at the time, the initial purchase was $250 million at about $11,600 per Bitcoin, which doesn't take a genius to work out, has paid off very handsomely so far. This was really the first time a major public non-crypto native company has done that. Now, before I keep going further, there are going to be a bunch of hate comments that come in. This is not an anti-Bitcoin video. I am pro-crypto, I am pro-Bitcoin, and I have owned Bitcoin since 2017. This has nothing to do with the validity of Bitcoin. And Michael Saylor keeps buying Bitcoin. He got slammed for this originally, but kept buying Bitcoin throughout 2021 as it rose from 11,000 to over 59,000 in mid-2021. Now, the bear market then happened, and guess what? He kept buying more. He stuck to his guns, and in fact, he doubled down to the point where his position was underwater by about 40%, and he was buying even at the absolute lows in December of 2022. Currently, as I'm filming this, MicroStrategy owns around 2.5% of the total supply of Bitcoin available. So that's about 450,000 Bitcoin they own right now, with plans to continue buying and increase that to about 4% of the total supply by the end of the decade. Now, this is a massively profitable position. Their average purchase price is around $60,000 per coin, and with the amount they now own, they're sitting on around $10 to $11 billion in unrealized gains. Throughout this time, so from 2020 to today, MicroStrategy stock has become a proxy for trading Bitcoin within retirement advantage accounts. A lot of this happened pre-approval for spot ETFs, which we do now have. And from about 2020 to mid-2024, MicroStrategy stock traded in line with Bitcoin. So if Bitcoin was up 10%, MicroStrategy stock was up around 10% and vice versa. Now, in addition to this, the options volume on MicroStrategy has exploded. Pre-2020, MicroStrategy probably averaged 500 options contracts a day, which is tiny. Yesterday, I'm filming this on the 10th of December, so yesterday, the 9th of December, 474,000 contracts were traded. That's almost a 1,000x increase in volume. It's consistently in the most traded stocks on the entire market, up there with the likes of Nvidia, Amazon, Palantir, and it's really the only stock in the S&P 500 that I've seen with a consistent implied volatility of above 100%. Typically, on any given day, MicroStrategy, the implied volatility level is between 110 and 130%. Typically, a stock that I would trade for the wheel would be between 35 and 55% implied volatility. Now, what does that all mean? What it means is it's become a higher beta version of Bitcoin. Now, this is just 2024 numbers. I've got MicroStrategy in green, and then I've got IBIT, which is the Bitcoin ETF. There's a spot ETF in blue. So Bitcoin itself as an asset is doubled roughly this year. So IBIT's up 105%. MicroStrategy is up 509%. So how has it outperformed Bitcoin so much? And despite all of this, why do you need to be cautious if you are going to trade it? So really, why is it so much more volatile? And it all has to do with their latest pivot, which is, some people refer to it as the infinite money glitch. Michael Saylor himself refers to it as securitizing Bitcoin. Now, what this actually means from a practical sense is MicroStrategy have started issuing convertible bonds. Now, this is not a new phenomenon. The convertible bond market itself is a $350 billion market. What this means is they are really just borrowing money from the traditional bond market at lower interest rates. Then they are lending to the crypto economy at higher interest rates. Exactly how banks work. So banks borrow from each other at lower interest rates and they lend to consumers at higher interest rates. It's not a new business model. It's very, very common. MicroStrategy, they profit from the spread. Now, the spread itself is much larger than a traditional spread because obviously we're not dealing with banks to consumers. We're dealing with traditional economy, lower rates, crypto economy, much higher rates. People are willing to pay a much bigger premium within the crypto economy. And this trade has become incredibly popular to the point where it's one of the most oversubscribed issuances. The bond issuance is so oversubscribed on Wall Street because everyone wants a piece of the pie for this, what they call the infinite money glitch. Now, first of all, why does this work? There's a massive arbitrage opportunity here because unlike any other asset in the past, Bitcoin is now considered a legitimate commodity, both as a technical definition of what Bitcoin is, but also as a legal definition, because when we're dealing with lending on an institutional scale, there has to be a legal framework and regulatory framework around it, and Bitcoin now has that regulatory framework. So you have an asset with inherent scarcity, because there can only ever be 21 million Bitcoin. That doesn't exist in any other commodity. So in gold, that doesn't exist because there is always more gold to be found. Soybeans, for example, we can always just make more soybeans. Coffee, whatever it may be, you have an asset with inherent scarcity now. The other part of this is MicroStrategy does not have cash flow risk on the bond itself because the bonds are backed by MicroStrategy's large Bitcoin holdings. So what's the problem here? What's the issue? And it has to do with the difference between Michael Saylor and MicroStrategy's timeline and the timeline for a regular shareholder. So there is obviously a downside to a trade. There is no such thing as risk-free returns. And with this particular trade, with a convertible bond backed by Bitcoin, the risk is in if Bitcoin drops massively. And this is actually a quote from Michael Saylor himself. I got this from the interview he did on Prof G Markets. He says, there is some theoretical risk that it might be more dilutive. Now, what does that mean? These are convertible bonds, and what convertible bonds mean is the bonds themselves can be converted to MicroStrategy stock. So if you're a bondholder, you can say, I don't want the interest value from the bond anymore. I would actually just rather have MicroStrategy stock. Now, to do that, MicroStrategy themselves have to create more shares. And what that does is, if you're an existing shareholder, the overall shareholder base is now larger. Now, this happens all the time in the financial markets because, when a company goes public, for example, an IPO, it's an initial public offering of shares. Same with a secondary offering. You're literally adding more shares so you can acquire more capital as a company. For existing shareholders, each of these dilution events makes your shares worth less and less and less. Now, if Bitcoin drops massively, which, as any Bitcoin owner will know, does happen, in this case, the bondholders are fine. The bondholders will get their coupon value back. So they're fine, they don't get screwed. It's the shareholders that get screwed through massive dilution. And here's what you need to understand if you're going to trade MicroStrategy. It's what Michael Saylor is not saying, because he's completely correct. This trade in itself is not going to blow up and make the stock go to zero. The stock only goes to zero if Bitcoin goes to zero, which personally I don't think is ever going to happen. There's a chance of that, but personally I don't think it's going to happen. As long as Bitcoin has value, MicroStrategy, the stock, will have value. So there's no extinction risk here. What there is drawdown risk. The risk of your shares plummeting in value. And here's what you have to understand. Michael Saylor is operating on a 15 to 30 year timeline with his Bitcoin acquisitions. His assertions and his actions are correct and they are aligned with that timeline. The same way I've owned Bitcoin for the past 7 years, I plan to own it for the next 15 years at the very minimum. And so I have the willingness to sit through drawdowns. But having run my company for the past 5 years and having been investing for the past 15, I know how people work. Common shareholders, very, very few of them are willing to sit through 50 to 90% drawdowns during that period. In fact, most people's risk tolerance is far lower than they believe it to be. And it's only when you experience those drawdowns yourself that you see the real issue. You know, everyone talks about, if we get a bear market or if we get a market crash, all I'm going to do is buy stocks, they're going to be so cheap. Having lived through multiple of these, I can tell you that doesn't happen. What does happen is people panic sell their shares, they hoard cash and they get scared off. So if you are in the minority who can sit through massive drawdowns, you will be fine. Most people simply are not. And if you're sitting here thinking, well, I think I'm a pretty tolerant person when it comes to risk, you need to understand this, because that's the key. Understanding how much drawdown you are willing to go through to get to your goals. So what I actually did is I looked at the various assets that I own and I looked at the drawdown they've had during this calendar year, 2024, which we're almost the whole way through. So my Bitcoin holdings, the maximum drawdown they had this year, so peak to trough, was 23%. In December of 2022, when we were in the midst of a bear market, it was 76% peak to trough. Now, my long-term stock portfolio had a max drawdown of 19% this year. So thank you, CrowdStrike. It's my largest holding. And obviously what happened with them in August, big drop, big drawdown. My wheel strategy account had a much smaller drawdown. The maximum drawdown I experienced this year in that account was 7%. And this all has to do with, okay, what are you trying to achieve here? If you just want max upside, then yeah, buy and hold Bitcoin, buy and hold MicroStrategy, but you have to understand you are going to go through massive drawdowns for doing that. If you're after more sort of steadier returns with lower drawdowns, then MicroStrategy is going to be the worst option for you for achieving those goals, because you are going to have to sit through huge drawdowns in the stock itself. So that's why I personally like the wheel strategy with much lower volatility stocks, because I can get above average returns with much lower drawdown risk. So if you want to learn more about that, then there's a link below. You can have a chat, but if all else fails, I hope this gave you some more context around MicroStrategy and just what they do, how they're achieving their returns, and the risks associated with the stock. Because I see so many people out there talking this up as like a risk-free trade and that whole infinite money glitch thing, and it's simply not true. So I hope you enjoyed this video, and I will see you in the next one.